Hello guys, in this video I'm going to show you how to use fundamental economic data or macroeconomic indicators for taking trading decisions on Forex market. First, suppose I'm a retail trader who don't have any idea what those fundamental or macroeconomic indicators or if even I have some of them, I don't know the meaning of those indicators. We will start from scratch. Open your MacroForex and then go to the analyzer. Add a new chart on your analyzer. Click on the plus button to add the data we want to analyze. First, let's go and find some economic indicators that can affect the movement of United States dollar. Once we found that, we can use it for taking trading decisions or putting our yes, taking the side that is compatible with the economic outlook. So let's filter the United States economic indicators. I set the impact to high. Okay, as you can see, we have the indicators here. I will add some of the indicators to the chart, like ISIM manufacturing PMI, ISIM non-manufacturing PMI, NFP or non-farm employment change, unemployment rate, average hourly earning. I don't have any idea that which one of these indicators affect the United States dollar price. So I just am adding some indicators and testing if there is any relation or not. Final GDP, civic consumer confidence, um, retail sales. What else should I add? Okay, I think it's enough. Or should I add more? I think it's enough. Okay. First, be sure that all the indicators start and end time is same, because we will use the correlation calculator to calculate the correlation between these indicators and United States dollar index and find out those that affect the price. And all of these indicator sources are actual. Output type is line. Click on the down button. Okay, here are our indicators, but as you might already know, each indicator has a different scale. So here we can't compare or see any pattern or anything. I forgot to add the United States dollar index to the chart, so I'm going back to the data selection and see trader tab. Here I select the US dollar index. As you can see, the start and end time is same. Time frame is daily. Source is closed. Let's add this to our chart. Okay, we have the United States index, United States dollar index here, and the indicators here. Due to scaling, as you can see, nothing is clear. First, let's change the name of United States dollar index to USD index, so it will be much more clear. Then click apply button. Okay, as you can see, we have the USD index. Now, to solve the scaling issue, we have to normalize this in the data sets. Select the chart, click on the apply functions button here. Select all the data sets because we want to apply the same functions on all of these data sets. Okay, we got all of them. Now I select the normalize function, which will normalize the data sets data points. And anything else? No, I will not smooth it out now, just normalize it. Okay, I normalize the data. Now it's comparable, but still we can't see anything because there are too many data sets, and checking each of those one by one will get time. So what I will do, and as now these data sets are in the same scale, I can calculate the correlation between these data sets. So I will use the MacroForex correlation calculator to see the correlation between each pair of these indicators with United States dollar. Okay, as you can see, all of these data sets are here. USD index is here. Now what should you do? So first select the USD index, then select one by one each of these indicators and click on the move right button. So we will make data pairs from this data sets. Now I deselect this and select again the CB consumer confidence. Deselect this, select USD final GDP. Deselect this, I selected the federal funds rate. Average hourly earning, USD unemployment rate, NFP, ISM non-manufacturing PMI, ISM manufacturing PMI. Okay, now take a look to the right side. Here we have the first series. All the first series are USD index, as you can see. The second series are different. Now we have retail sales, consumer confidence, final GDP, federal funds rate, average hourly earning, unemployment rate, NFP, ISM non-manufacturing PMI, ISM manufacturing PMI. So the model generator will set different chart numbers for each of this. Don't change the chart number, okay? Here what we have to change, we have to change the base from percentage change to normal. If it's in percentage change, first the model generator change this data sets data to percentage change mode or percentage return, then it calculates the correlation. That's not what we want. What we want, I want is the calculation of correlation from the raw data, not the percentage change. So I set all the bases to normal, as you can see. Okay, now everything is fine. We have to click on the done button. Okay, here are our correlations. The data generator model, data pair generator model, added a separate chart for each of the data set pairs. As you can see, here we have USD index and USD retail sales. And if I go down, I have USD and USD consumer confidence, and USD and index and final GDP and funds rate, all the data sets. Now we have to filter out the indicators, find those that have a higher correlation with United States dollar. Something like more than plus 0.2 or below or less than minus 0.2. So first is the USD retail. Let's see how much is the correlation of this. We will use the last correlation point as the correlation value. As you can see, it's 0. So there is no relationship between retail sales and United States dollar index. So what I am doing is I remove this correlation pair chart by clicking remove selected chart button from the toolbar. Next one is the consumer confidence. The correlation between consumer confidence and United States dollar index is more than around 0.7. It's great. It's awesome. The correlation is very high, and as you can see, this economic indicator has a huge impact on USD price. And including this on our model will be very beneficial for us. So I'm keeping this one. Let's see the next one. Next one is final GDP. Okay, how much is the correlation? It's less than 0.1. So I'm going to remove this chart. Again, another one. It's federal fund rate or interest rate. Fed interest rate correlation with United States dollar is around 0.2%. Around 0.2. Sorry, not percent. I used percent. It's not percent. Around 0.2. So it's not that much high. What I'm going to do is I will remove this chart too. It doesn't has any use for us. And next one is average hourly earning. How much is the, okay, it's also below 0.2. Something I should say is the 0.2 to minus 0.2 to 0.2 is not something special or coming from some statistical model. I just chose that based on my own understanding. You can set any other limit if you want to. So don't be too fixed on that number. I'm just showing you how you can use the fundamentals data. Okay, it's minus less than minus 0.6. Another great indicator, USD unemployment rate or unemployment rate in United States. It's great. We will use this on our model, so I will keep this. Let's see the next one. What's the next one? NFP. How much is this? Okay, it's above 0.3. Another great one. We will keep it. And ISM non-manufacturing PMI above 0.4. We will keep this one. And this is ISM manufacturing PMI above 0.2. We will keep this too. Okay, these are the indicators that we will use on our index model that I'm going to generate, and we will use the correlation amount as a weight for the indicator on the index. So how I'm going to use this, I will suppose the correlation of this one is 0.77. What I will use is 7.7 for the weight of this data set in our index model. Now I'm going to uh, wait a minute. I'm going to record the correlation of each of these data sets. The CB consumer confidence, CB consumer confidence, consumer confidence is 0.77 or 7.7, which I will use. Another one is unemployment rate, and it's 0.65 or 6.5. Let's check the next data set. It's above 0.3. 0.34. It's NFP. NFP 3.4. Let's check the next. 0.44 ISM non-manufacturing PMI. ISM non-manufacturing PMI 4.4. Next one is USD index. Okay, ISM manufacturing PMI. It's around 0.26 or 2.6. ISM manufacturing PMI 2.6. Yeah, it was 2.6, I think. Yeah, it's 2.6. Now I will remove these charts by selecting one of these charts and then pressing Ctrl A to select all the charts, then click on the remove button. Okay, all charts are gone now. I will add a new chart here. I will go to the indices. I don't have any index now. I'm going to create a new index. Okay, I will set the index name USD fundamental index. Okay, now I will use the same indicators that we recorded for our index. I have to again filter out the indicators to set the currencies to USD and impact to high. Click on the apply button. Okay, which one? First, CB consumer confidence. CB consumer confidence. Another one, unemployment rate. Unemployment rate. Another one, NFP, non-farm employment change. ISM, ISM manufacturing PMI, ISM non-manufacturing PMI. Okay. Next, I have to click on the done button, so all these data sets will be added to my index. Okay, here are the data sets. What I'm going to do now is setting the weight of these indicators. I already have the weights. For CB consumer confidence, it's 7.7. For unemployment rate, I think it was minus 6.5. I think it was, I don't remember. It should be minus 6.5, not 6.5. Okay, let's set it to minus 6.5. It was minus or okay, set it to minus. Non-farm employment change. I will again check the unemployment rate weights. So for now, set it to minus 3.4, 4.4, 4.4, 2.6. Okay, we have all the weights here. Now we have to click on the save button. I hope to not set the unemployment rate indicator weight incorrectly, because it has huge effect on our data set. The weight is 6.5. So add chart. Now let me first check the, I will add a new chart. Unemployment rate. We see high unemployment rate. US dollar index. And then I'm going to check again the correlation between these two. So if I set the weight incorrectly on my index, I will correct it again. Okay. Apply the normalization function. Normalize. Done. I think it was minus. Data pair model generator. I have to swap the series. Set this to normal. Yeah, it was minus. I'm not wrong. Now select this two. I have to remove this two from my workspace. Okay, we have the index result. Now let's compare this with United States index, USD index. Sorry, USD index. Where is the USD dollar index? Okay, okay. Now let's normalize the United States dollar. I will have to normalize both, because the index is not normalized. To normalize. Done. Okay, you can see here that this two going very closely, not closely, but they are close. So let's calculate the correlation between these two. This fundamental index, and sorry, let me do something first. I have to change the name of this to USD index, or sorry, price index. Okay, so it will be clear for you. How much is the correlation? Normal correlation. Let's hope it will be higher. Okay, the correlation is 0.6. It's high. The correlation is high. 0.6 is high correlation. So this following this index, US fundamental index, can give us alpha little bit. If you add this to your strategy, and if it is climbing up, you buy the dollar, or at least don't sell it. You will be in a much better position instead of using all those useless non-working technical indicators that you're using. Why it works? Because I showed you the correlation between these two, and there is nothing fancy about this. This is how market works, how forex market actually works. A currency, country currency follows its economic situation. If the economy is growing, it's the currency is doing well most of the time, not all the time. And if economy is shrinking, the currency is doing the currency will do really bad, and it will the value of the currency will decrease against other foreign currencies. So in this video, I showed you how to use the economic or macroeconomic indicators to take a trading decision on forex market. It's not anything like a recommendation or trading signal. It was just for education purpose. And I'm sure by doing a little bit more, or spending a little bit more time on those indicators, you can build much better indices than what I built, because I just selected some indicators and set some weights. And if you spend a little bit more time and do some more analysis, you will come up with much better stuff than me. You can build the same type of indices for euro, for pound, for any other currency, because in MacroForex there are all major currencies macroeconomic indicators. If you build one for euro and one for dollar, and then compare those two, if one was growing and the other one was falling, it will be really great signal for trading your USD pair. So I'm going to end this video here. In next videos, we will dig a little bit more deeper on building this type of indices for currencies, and using those indices for trading and taking the trading decisions. So bye bye.